Welcome back to another breakdown, and let's get right into it. So first we start off on the daily time frame. On the daily time frame, we want to identify the direction of the market. If I look to my left, you can see price is in a bullish market structure, making a higher high that has broken and closed above this previous high, followed by a retracement and a possible continuation to the upside. Next, we need to identify our impulse, and this is going to be our impulse right here. The rule to the impulse is it should be all one color. Can clearly see our impulse right here is all green candles, followed by a retracement of at least two daily candles, and all the candles within the retracement needs to be all one color. Next, the impulse should break and close above the highest point of the previous structure, and as you can see, this impulse has broken and closed above the highest point of the previous structure. On the weekly time frame, we want to draw out our support and or resistance that could be of influence to our trade. So if you look to the left, you can see this level was previously resistance, support. Right here, it has broken above and it is now using it again as a support level, followed by a bullish engulfing. On the daily time frame, we are going to draw our fib from the end of the retracement to the beginning. This is because we expect the new impulse it is going to form to travel at least to the negative 27 before having its retracement and its continuation. On the 4 hour, we're going to wait until we have a break of this 61 level so we can place our entry and get tapped inside of the trade. So right now we are waiting until the 61 level gets broken. Here you see price has broken and closed above the 38 level. If price breaks and close above the 61 and also breaks and close above the 38 without retracing and tapping us back inside of this trade, that means we are no longer going to consider this trade as a possible setup. What we will do is wait until price comes back underneath, followed by a break above the 61 once again to tap us into the trade, and we can ride it all the way to TP. So if price breaks above the 38 before tapping you inside of the trade and close above, we are not going to take this trade. So right there you can see what would have happened. Price came crashing all the way down. Now we are just going to wait until we have a break above the 61 level once again. Here you can see we have a clear break. That means we can place our order on the 61, stop loss on the 88, and our take profit always goes on the negative 27. Right here we are going for at least a 1 to 3. So in this case, I can move it a little bit higher in comparison to the 61 level. So a 1 to 3. And we wait until we get tapped back inside of this trade. Here you can see price has tapped us inside of the trade and also broke above this 38 level, meaning our stop loss can now go to our entry point and it becomes a risk-free trade. We are waiting until our take profit gets hit, and as you can see, our take profit has been smashed. So this was the breakdown on Euro JPY for a 1 to 3. Don't forget, if you want to learn the strategy, use the link for the course in the description. Peace.